Good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Well, we'll begin with the latest projection for Nigeria's economic outlook from the International Monetary Fund. The fund has projected that Nigeria's economy will grow by 1.5% in 2021, slightly lower than the 1.7% it had predicted for the country in its previous forecast. In its latest economic outlook, the Bretton Woods Institution expects sub-Saharan Africa's economy to strengthen by 3.2% this year and 3.9% in 2022, owing to policy support and vaccines expected to lift activity. The IMF says the updated version of the report was reviewed in line with the emergence of a new variant of coronavirus, which poses as a concern for global recovery. You know, Ladi, the interesting thing here is that IMF is saying that oil exporting countries, are worse for, in this whole thing. Yeah. And you know where Nigeria is, oil-dependent economy. So I wonder where that leaves us. But there's still hope. Yeah. The vaccine, giving the global economy some kind of hope.
And we should look at diversification from now on, Absolutely. At least, yes. And here's how volatile the oil markets can be. Prices slid in early trade today on fresh worries about the weakened fuel demand after England clamped down on travel. And China, the world's second largest oil consumer, also sought to limit Lunar New Year trips to stem a surge in COVID-19 cases. U.S. West Texas Intermediate crude futures fell 12 cents to $52.72 a barrel, raising some of Wednesday's gain. Brent crude futures fell 16 cents to $55.65 a barrel after losing 10 cents on Wednesday. The market had been supported earlier this week by a surprisingly large decline in U.S. crude stockpiles in the week to January 22nd, which analysts said was due to a pickup in U.S. crude exports and a drop in imports. But attention is now turning back to demand concerns amid a rise in COVID-19 infections with contagious new variants. More concerning is China. Analysts said whose increasing fuel demand supported the market last year. The country is now facing a rise in coronavirus cases as it heads into what is normally the busiest travel season of the year, the Lunar New Year holiday.
In the meantime, the journey of the passage of the Petroleum Industry Bill seems to be getting to destination with a promise by the Speaker of the House of Representatives that lawmakers will pass the bill by this year. The Speaker, Mr. Femi Gbajabiamila, gave the indication at the opening ceremony of the public hearing on the bill.
The House of Representatives commences a two-day hearing on the Petroleum Industry Bill, just a day after the Senate concluded its own. The hall is packed full as physical distancing is ignored. The PIB, when passed, will provide legal governance, regulatory and fiscal framework for the Nigerian petroleum industry, as well as the development of host communities. While declaring the hearing open, the Speaker of the House of Representatives says the plan is to pass the bill within 3 months.
Some may consider it a tall order, but we will do it. And we will do it with every sense of responsibility, without compromising the thoroughness of the work that will be done. We intend to pass this bill by April.
Submissions are then received from participants on the bill as submitted on the 20th of September 2020 by President Muhammadu Buhari, who is also the Minister of Petroleum.
The end thereof being to operationalize the law in a manner that best achieves the aims and objectives.
And what we can do today is to focus on deepening our midstream and downstream. That means, bringing more gas into our domestic market. Yes, there's room for export, but there's a market for domestic gas.
Let me use this opportunity also to pay special tribute to my constituency, the oil and gas workers that have created the wealth of this country. Nowhere in this bill has any provision been made in line with ILO global standards to try to make sure that they are accommodated.
Some oil-producing states also make presentations, mostly related to the host communities and the governance aspect of the bill.
We disagree with a 12-month incorporation period because we think that the host communities need more attention than even as much as the business itself requires. And therefore we believe that it should be reduced to 3 months from the proposed 12 months.
The vesting of enormous powers in the minister that is not limited or constrained by oil-bearing states pose a clear and present danger to the oil-bearing state as it leaves the state at the mercy of the minister.
While some participants believe that the petroleum industry should have a single regulator instead of multiple agencies that could cause unhealthy rivalry, the general opinion here is that they want a PIB that will support government revenue drive and also boost investors' confidence. Terry Ikumi, Channels Television News.
You know, Ladi, listening to this report, the question that comes to my mind is, if this sector is really that important for Nigeria, why are we delaying this bill?
Exactly.
You know, I really don't know. It's been on for a very long time, but let's just hope they say April. We'll keep a track of that.
As soon as possible, hopefully. And yesterday, the Federal Executive Council approved a 124.3 million variation of contract towards the construction of an electricity substation project in Lalate area of Oyo State and Abeokuta in Ogun State. After the meeting, the Minister of State for Power, Mr. Godwin Ajediagwa, says the approval implies that the national metering program directed by the President will soon be completed and services will improve.
Ministry of Power had 2 memos today. The first one had to do with the approval for variation of contract for the construction of substations project in Lanlate and Abeokuta. Lanlate and Abeokuta in Ogun State. Council has graciously approved for an extension of a 2-month extension and also variation of the contract sum. So if we have those 2 substations prepared, fixed by TCN, will be able to step up its production of power, its distribution of power in transmission of power in that area, and the whole of Ogun State and most of the Southwest will have power improved. You know, the President has approved metering program for the whole country. So when Yola Disco was informing us to note that they have commenced this process and entered into agreement with a MAP, that meter providing company, to do that. And so it was just noted that this is done and it's going on. And we assure you that the President's directive regarding metering of the entire country will soon be completed and services will improve.
Well, we'll take a moment and be back for update on domestic commodities market as Damilola Akimbami, research analyst with Financial Derivatives Company, joins us next. Well, Damilola Akimbami, head of research at Financial Derivatives Company, is here with us again. Dami, good morning. Good to see you again.
Good morning, Chimize. Good morning, Ladi.
Well, I think a lot of people are beginning to come up with outlook for 2021, and the latest is from the IMF. Of course, looking at Nigeria, the global economy, 5.5%, Nigeria, 1.5%. So what hope, does this present for the future with the resurgence of COVID-19?
Well, what it means is that 2021 is the year of recovery. At least that's what all analysts can agree on that fact. And as the IMF has said, it will be driven by policy support, which the large economies are in a better position to provide, and vaccine distribution. And let's talk about vaccine distribution. For instance, in US, the President Biden has a target of vaccinating or inoculating about 1 million people daily. We know that South Africa has already ordered for about 1.5 million doses of the vaccine. Kenya to about 2 million doses. Nigeria, how many have we placed an order for? Just about 100,000. And we have a population size of in excess of 200 million. So that definitely it barely scratches the surface. So if we had yet to actually order for a significant amount of vaccine doses, when are we going to expect this recovery process to start? And bear in mind that even the IMF has said that this recovery is going to be uneven across regions, and the categories of countries that are going to be hard hit are the tourism-dependent countries and the oil exporters, and Nigeria falls within that category. And because we know, obviously, oil prices have been very volatile of late due to various reasons, supply-driven and demand pool-driven. So for Nigeria, it's very important, and I think it says a lot, because if we're just placing an order for 100,000, when will it get to Nigeria? When would the distribution start? When would the vaccination start? And bear in mind that 100,000, like I mentioned, compared to a population size of over 200 million, who gets to be vaccinated first? Is it going to be the frontliners? I'm talking about the health personnel. Is it going to be those within that vulnerable category? Is it going to be public officers? Who knows? So it's very important. And also the IMF mentioned something that in 2021, we're going to see an increase in the number of people that are going to fall below the poverty line, 90 million. And Nigeria is already the poverty capital. And by 2015, we expect to see that Nigeria would have most or the largest number of poor people. So that's very important. And you need to stimulate growth. The vaccination, distribution of the vaccination would help in stimulating economic and business activity.
That's the more people we vaccinate.
Exactly. And that would trigger a quick recovery.
Okay. Well, India is Nigeria's major trading partner. And now India says by 2030, electric vehicles will become the order of the day in India. What does this mean for Nigeria?
That's another challenge.
Yes, it's a major challenge. It just shows to you that oil is gradually becoming obsolete. And at a certain time, the demand, right now, the demand for oil is very tepid because of the pandemic. And with this gradual shift to electric cars, to greener and cleaner energy, so the demand for oil would decline. And once that demand is not there, investments would decline. So for a country like Nigeria, it's just a matter of time when oil prices, we're still thinking, God, the oil prices are around $50, $55 per barrel. Oil prices may fall much lower because if there's no investment, all these oil majors, all these international oil companies, they would stop to produce oil. So it's a major issue. It just emphasizes that diversification strategy, not in terms of output, because we have so many sub-activity levels, but in terms of the revenue base. So taxes, non-oil exports, agriculture. We've talked about cocoa so many times. What other raw materials, what other minerals do we have? We have close to 30, 40 mineral deposits in Nigeria. So we can expatiate, we can broaden our revenue base.
And then even now, talking about cocoa, of course, which is Nigeria's major agri-export. Now, that is being threatened in the southwest, where we have security.
Yes, it's been threatened by that. But the good news is that right now, weather conditions are favorable, especially in Oyo State. So we're expected to see an increase in production. And we know that the government is also investing in the rehabilitation of old cocoa farms and also trying to establish about like a 2,000 hectare cocoa field. The government is also investing in new varieties, cocoa varieties, and these ones have a shorter gestation period. So all these should contribute to an increase in output. But again, like you mentioned, that security issue is a major issue, and not even just in the southwest. We are all aware of the insurgency that is occurring in the northeast, and that is also the food-producing belt of Nigeria. So cocoa is being affected, rice, other commodities that we grow are being affected, and these will continue to affect and dampen the output and yield from the agricultural sector.
Okay, the IMF also expects oil prices to average above $50 per barrel in 2021. That's a 21% rise from the 2020s. And on the back of the rollout of vaccines and fiscal stimulus programs, is this in line with your outlook?
Yes, so we're also anticipating that oil prices would average around that $55 per barrel this year, which is an increase over 2020. So that's good news because we need oil prices to be as high as possible because of the production aspect. Bear in mind that the revenue is based on an oil production target of $40 per barrel and a production of 1.86 million barrels per day. Now, Nigeria's oil production, current oil production as at December, and according to OPEC, was pegged at about 1.4 million barrels according to secondary sources. Now, that is significantly lower than the budget projection of 1.8. And we can exceed our OPEC quota. If we do, we're going to be penalized and we'll be forced to comply. So we need oil prices to be as high as possible to reduce the gap or to offset the shortfall that's going to come from production. Because if not, our deficit needs will continue to increase. We keep talking about Nigeria's budget deficit. Right now, it's projected to about 5.6 trillion naira this year, which is about 3.3% of GDP. How do you fund that deficit? The government has said it's going to desist from borrowing from the IMF. We know that it might not go to the Eurobond market. Besides, we have a Eurobond maturity
tomorrow.
$500 billion. So what are the other options? Domestic borrowing. If the government focuses more on domestic borrowing, that's going to crowd out the real estate sector.
Yeah, talking about this Eurobond maturity now for tomorrow, what will all of that now mean for the domestic commodities market as it is?
So, first of all, the fact that we are, the government is paying down on its debt, it's a good thing because at least you are reducing your external debt by $500 million. However, because you are paying out, it's going to affect your external reserves. And the more the external reserves continue to deplete, it reduces the CBN's ability to ensure stability in the forex market. And we know that we've seen at the power market, the rate has been trading between 475, 480, and at the I&E window around 393, 394. So definitely it works. We are seeing all proceeds being constrained, and if we're also seeing that we are paying down on our debt, our reserves are going to be affected. So the CBN would obviously have to come up with some exchange rate management tools. We know he has come up with so many circulars about remittances, about the IMTUs and the export proceeds. So all this is because it's trying to control the supply, it's trying to boost liquidity, because as long as there's that dollar shortage, exchange rate pressures would continue.
Inflation will continue to rise.
The imported inflation, which is a major issue.
Okay, a quick one, just take us through the commodities price movement and their major drivers.
So in the domestic market, so we talked about imported inflation, so that's still going to play a major role. So for instance, wheat prices are increasing because one, Russia has imposed an export tax, and we're beginning to see demand strengthen. So obviously, if wheat prices are increasing and we import wheat, it will affect the price of flour, which has stayed stubbornly high. Cement prices are relatively stable now, but like I mentioned on Tuesday, this is a dry season, and we expect to see increased construction, which will affect the price. Other commodities such as tomatoes, pepper, they are right now declining, and that's because this is still the harvest season for these commodities. Once we start moving to the planting season, which would be sometime in Q2, because of that supply shortage, prices are going to increase.
Great. Dami, thank you very much. It's always a pleasure.
Thank you. Yes, thank you very much.
Okay, Nigeria's economic growth outlook remains our focus as the Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, joins us next.
And it's not just the multilateral institutions that are coming up with their growth outlook for the Nigerian economy. The Lagos Chamber of Commerce and Industry expects the economy to return to positive growth path in the second quarter of this year, albeit the pace of recovery is expected to be subdued within the region of 1%. The Director General of Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, joins us now. Great to have you, sir.
Yeah, thank you.
Good morning.
Good morning.
Good to see you.
Thank you for joining us.
Thank you.
So let's begin by examining the economic recovery prospects in 2021. You don't seem too optimistic about it.
Well, we are partially optimistic. Of course, we are concerned about some of the challenges that the economy is facing. And that is why in all our advocacy activities, we keep emphasizing the importance of an enabling environment. In all of these things, we have the external drivers, that the external sector issues. We have the domestic variables. The external sector issues are some of the things you discussed with Damilola. The oil price is very critical to the recovery. And luckily, at least we are seeing an improvement in oil price. We are seeing the oil price now at $55 per barrel. Then, of course, there is also the issue of the COVID, the vaccine. That also will moderate the anxiety in the global economy generally. And when global economy stabilizes and things begin to gain momentum, it's also likely to impact positively on the domestic economy. Then, of course, there is also the new administration in the United States. Now, the new administration in the United States may not take us to the pre-Trump era fully, but it's going to be better than the Trump era in terms of issues of global trade, in terms of the multilateral disposition, and all of these things also have a way of improving the global economic environment. So on the positive side, we see that those things are likely to also impact positively. Then on the domestic front, we have issues around policy. Just as you said in the IMF report, that policy is key to recovery. It's one thing to have all these fundamental variables, oil price and all of that, being positive, but the domestic economic policies, the domestic institutional and regulatory environment are very important as well.
Right. So
sometimes even more important than some of these.
Talking about policies now, to facilitate recovery, I know that LCCI made some kind of recommendations around the foreign exchange, government spending, and regulatory issues, and so on. So what are these recommendations, and how key are they?
You see, we cannot overemphasize the issue of foreign exchange management. We don't like to sound like a broken record. But as long as that challenge is there, we need to continue to engage and have conversations around it. The current foreign exchange policy environment is still not conducive enough for investment. First, I'm not talking now about the depreciation of the exchange rate, because the depreciation of the currency is partly the outcome of the policy environment. If you have a different policy model around the forex, we may not be having the kind of sharp depreciation that we're experiencing.
So what kind of policy model can the central bank really adopt?
The policy model, right now, the parallel market rates, which the CBN don't want to reckon with. But as far as the players in the economy are concerned, it's a major indicative rate. It's about 480. The NAFEX rate is 380, 379 or something? You know? So we are having a gap, a premium of about 80 naira on a dollar. That is a major source of distortion for any economy. And when you say you have a market...
Well, the central bank governor has continued to say, look, the parallel market is not what determines the exchange rate.
No, it's a major factor in pricing. This economy is about 50% informal. It's a key indicator. We cannot ignore it.
Absolutely.
You can see that when fundamentals shift, when policies shift, like the time we had this diaspora remittances policy, you could see the impact it had. So it's a systemic thing. And we need to get the system to work properly. We cannot have okay, you say we have a NAFEX market. If it was a purely market-driven market, if you need forex of $1 million, you should be able to go there and pick it up, if it is purely a market. But people go there and you can't find the forex. And yet you say you have a rate of 379 or all of this, you know. We need to get it right. And that is why we keep saying this issue of unification of rates is key. And the CBN has been talking about supply-side strategy. The CBN governor was citing the example of Pakistan or somewhere in his MPC communique. To boost supply, you need to also put on the table a market rate. If you don't put a market rate on the table, we continue to have issues. So it's a contradiction in terms. If on one hand, we are worried about the challenges of scarcity of foreign exchange, on the other hand, our policies seem to be suppressing supply. It's a contradiction. Now, take the example of the exporters. The CBN has announced now that there's going to be serious sanctions on exporters because they are not remitting. But if you want them to remit, and they remit and they are compelled to be taking 379, when they know that the market rate is 480. Even if you discount issue of, make it even 470. It is still a huge disparity. So for us to get compliance on policy, the policy and the regulation must be fair, it must be equitable, it must be right.
In other words, unification of the exchange rate
unification
is where to
and
go.
Anybody who is bringing forex, whether it is export proceeds, whether it is FDI, whether it is portfolio flows, let us have a framework where you can engage with the bank, willing buyer, willing seller basis. and you sell at a mutually agreed rate. If we do that, we are going to see a dramatic change on the supply side. And that will help to moderate all of this tension. It will also reduce the distraction for the CBN. Because managing this kind of premium rent-seeking environment is a very difficult thing to manage.
And that
how many
has
fires will
continued
you
to
fight?
stoke inflation.
It will stoke inflation, then how many people will you run after? So the system must be right. The policies must be right. And we should, as much as possible, allow the market to function. Okay. If the market functions, of course, in any market environment, that's what you call intervention. You intervene if there is need to moderate the prices. And you don't intervene by fixing the price. You intervene by injecting some supply or something. Or you could also use fiscal policy measures to say, okay, there's a tariff on this, there's a tariff on this, in order to reduce the demand pressure. Anyway, these are policies that are sustainable. And these things are critical for the recovery of the economy because we need private capital in this economy. We need people to bring in money. And we need to create the policy environment for this money to come in. Okay, that is the point we are saying.
Looking at the private sector now, you know, the resilience of businesses have been tested and across various, and they have to readjust their operating models. What recommendations do you have for businesses moving forward?
Well, the thing is that these are very challenging environments. And we know that we also have very sound entrepreneurs in this country, very smart entrepreneurs. And when things happen like this, of course, businesses have to rejig their business model. You need to understand the market better. You need to understand your suppliers better. You need to have better negotiation. You need to use better technology, you know, to make sure that, because business is about competitiveness. So a proper understanding of the market, a proper understanding of the cost environment, a proper understanding of the policy environment. All of these things are very critical to be able to manage the risk that I imagine. Because it's a very dynamic space. And sometimes the environment can be very volatile. And if you don't have that kind of very broad and deep understanding, it could create a whole lot of issues. So that is why, I mean, in the last 1 year or so, you can see that the use of technology in business has increased. A lot of digital application, you know, to ease the business, to ease meetings, to reduce travels and all of that. All those things are happening. But a proper understanding of consumer preferences is also important. Because as a business person, you are in business to serve the consumers. So whatever the consumers want, either in terms of quality, in terms of their price, in terms of the size of the product, whatever it is.
And just changing with the times.
You have to change with the time. Right. That is key.
Now, talking about trade,
Yes.
looking at trade issue, I know that for some time we've been talking about issue of cargo clearing at the ports. You are an advocacy business, if I would put it that way. What's the situation now? Is it getting better? Because I know that LCCI keep complaining about
We keep complaining about this cargo clearing. You see, when we talk about investment environment, the entry and exit point for trade, import and export, is very, very critical. Unfortunately, this sector is not getting the right kind of attention. First, there is the issue of the very laborious documentation that you go through within the ports for you to... You see people carrying documents, moving from table to table. Sometimes you could be visiting almost 15 tables.
Wow.
To either get one signature or one stamp. And some of these stamps and signatures don't even add any significant value to the process. But because everybody wants to be part of the system, you have to go through them. Then we have been talking about use of technology, the issue of the single window and all of that for so long. That is still not happening. Then we have the issue of the traffic in and out. You have the issue of the facilities, cargo handling facilities, with the terminal operators, shipping companies, and all of that. And because when you are in that system, you are dealing with monopolists. So they do anything and they get away with it. So that is why it is important to have a proper regulatory framework, which Nigerian Shippers Council is doing now. But the Shippers Council also needs to be properly empowered to be able to ensure effective regulation of the system. We have seen importers being charged demurrage and all of that for delays that were not caused by them. You could have an issue, a breakdown of facility. You could have an issue with the documentation processes. And once the grace period lapses, the cargo begins to generate demurrage. And this has cost a lot of importers a whole lot of money. And unfortunately, there is no framework for proper redress.
Now that we have the AFCFTA now, how I don't know, how will that change things?
The AFCTA is a very important phenomenon that is creeping in now. It's going to change the competition landscape. And if you are not careful, it may be a destination just for people to come and sell things, rather than a destination for investors to come and invest. And the kind of environment we create is what will determine what will happen and the kind of benefit we are going to get from the AFCTA. Because AFCTA is about competitiveness. Now we are talking about international competitiveness. So that is why it is important. All these challenges and bottlenecks at the ports, the traffic gridlock and all of that, all these challenges about foreign exchange access, the liquidity, we need to sort all of these things out if we really want to be an effective player in the African Continental Free Trade Area.
All right. Thank you very much, Dr. Yusuf. It's always a pleasure having you. And please come again whenever we invite you.
It's a pleasure.
So much. Thank you.
Okay. Of course, we'll go to look at what the equities market did yesterday. But before we get to Edidion, this is again what the IMF is saying about Nigeria's economy, projecting growth to be by 1.5% in 2021. That's slightly lower than the 1.7% it had predicted for the country in its previous forecast. In its latest economic outlook, the Bretton Woods Institution expects sub-Saharan Africa's economy to strengthen by 3.2% this year and 3.9% in 2022, owing to policy support and vaccines expected to lift activity. Okay, the equities market now. Eddie, it looks like the bears have gone into hibernation.
Chime, you are right. But just before we go to that, just listening to your conversation with Dr. Yusuf, it's not just the Nigerian economy that needs to be prepared, to position itself to be competitive with other economies. Even the market in Nigeria need to be competitive, because if the markets are not competitive, the market is where the government can also come to raise money. Absolutely. And all other things. So the markets in Nigeria also need to take cue from what's going on in other economies. I mean, the stock market now, the Nigerian Stock Exchange with its demutualization process seems to be, taking a step in that direction. So we'll keep our fingers crossed and hope that, the capital market in Nigeria will be able to stand with its counterpart in other global markets. But Chimi, to what you said about the market, the bulls are here. The market was up 0.83%. yesterday to 41,930.73 points. Now, the All-Share Index and the market cap are nearing new levels of the 42,000 level and the 22 trillion naira level. So, it's a good time in the markets right now. Activity level was higher yesterday compared to the previous session. We saw 543.59 million units worth 7.32 billion naira traded in over 6,700 deals. The sectoral performance was mostly positive, apart from oil and gas, which declined 0.12%. But to talk more about the market and what drove sentiment is Tajuddin Olayinka, a stockbroker at Valmont Securities. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning.
Now, could you just give us more details about what transpired in the market yesterday? What drove sentiment? What was responsible for the gains in the market?
We have seen movement in some liquid stocks. Clearly, we have seen strong performance coming from companies like Airtel and MTN and quite a few other rich sector companies. So, and what is driving this sentiment is basically we are already in the earnings season. So investors are preparing for what will likely come out from some of these companies by way of dividend or any other corporate action. So the investors are actually preparing for what to expect and what they can easily benefit from from these companies.
Speaking about earnings now, Cadbury has joined the list of companies to release its earnings. What did you make of those numbers?
Well, the Cadbury case is expected. They were affected by the border closure. They were, they were affected by lockdown. So there was border closure before lockdown, and so the lockdown actually worked in their condition. But I think all the same, on the balance of when you put on the pedestal, you still see some semblance of improvement in the performance, though not as much as what they did last year. Because it's an interim result, we can't really say much about it. But even at the same time, you will see clearly that they were seriously affected by the lockdown for 6 months, and then, of course, the border closure by the Nigerian government. So the result was not quite impressive for Cadbury.
All right, Mr. Olayinka, thank you for your input on the program. Tajuddin Olayinka is a stockbroker at Valmont Securities Limited. Well, Timmy, just like what he said, Cadbury was really hit by so many things last year, and the results were not impressive at all. Lower revenue, lower profit after tax, lower, profit before tax. It wasn't good, but hopefully this year will be better.
But then the market continues to be on the upside trend. And you know what? I was reading something today from the IMF warning governments to keep COVID rescue programs or risk triggering stock market crash. So you see, what is happening at the stock market right now, where you have the fixed income market, the yield of the fixed income market, not encouraging investors to, invest in that market, now pushing more interest in the stock market. I think that, again, is bringing some kind of, concern for a lot of people. So I guess we have to watch that, Eddie. Okay, we'll take another quick break, and then when we come back, we check in with London.
And Juliana joins us now to give us updates from London. Thank you for joining us. Good morning. Yeah, let's begin. Good morning. Let's begin from the data front. UK car production in 2020 slumped to its lowest level since 1984, and some experts are calling it the worst in a generation.
It is the worst in a generation, and I believe these details revealed today from the Society of Car Manufacturing does show just the vast scale of damage that COVID-19 has caused car manufacturing in this country during 2020. And unfortunately for them, it wasn't just COVID. They also had Brexit uncertainties. We didn't get a Brexit trade deal until the 24th of December, and this is really reflected in the figures released today, showing that car manufacturing fell by 29.3% last year to just over 920,000 cars. In December, car manufacturing was also down 2.3%, and it's not just manufacturing as well. New cars are down. Tens of thousands of more people have held back and not purchased new cars or upgraded their new cars just because, there's so much consumer unconfidence at the moment, which is really causing a lot of disarray within the car market. There is some good news. We do actually have a statement from the Society of Motor Manufacturers. They have said that these figures represent the worst in a generation, as we said, reflecting the devastating impact of the pandemic. However, the industry faces 2021 this year with more optimism, with a vaccine rolled out and clarity on how we trade with Europe. Last week as well on the programme, we spoke about the Chief Operating Officer of Nissan, Ashwani Gupta. He gave a virtual a statement about this Brexit trade deal, and he did confirm that Nissan will be keeping its car plant in Sunderland, and because of the new trade deals of the rule of origin, new electric vehicle batteries will also be made in Britain. So there is optimism, but of course, you know, it is the trading update season, so we are going to get lots of these retrospective look backs into 2020, and manufacturing has also been one of the main catalysts of loss in this country.
And Cairn Energy has threatened to seize Indian government assets following a $1.2 billion award from a long-running corporate tax case. Any update on this?
Well, this is a complex story, but an issue that is definitely going to cause a lot of nightmares for India's Prime Minister Narendra Modi, especially because tax terrorism, not called that by me, I can assure you, has been something that has plagued Indian governments for quite some time now. So a lot of the financial investors are looking at this case very, very closely. Now, Cairn Energy are an oil and gas consultancy firm. They are headquartered in the UK. They do have franchises across the world, including in India. And now this case stems back to 2012, when a new Indian law brought in this new tax code, which did mean that they could charge retrospective tax. And Cairn Energy got caught up in this. They got embroiled in this new tax code, and they got a bill, I believe, of over $4 billion. Now, they've taken this to the International Arbitration Court in The Hague. In December, the court unanimously agreed that India would have to repay over $1 billion, but they have seen no response. They haven't heard anything from Narendra Modi's government, which means that now Cairn Energy can legally seize sovereign property. We've seen these threats before. I know the Nigerian government are familiar with this too. Not great, a very long-winded process, but the arbitration court have awarded this sum. Like I said, this has been a main issue of criticism from the Indian government when it comes to this tax terrorism and applying retrospective tax codes to foreign companies who are doing business there. So you could start a business in 2006, which I believe applies to this Cairn Energy case. But the 2012 tax code went back 6 years, started applying all this tax, but it has been reversed by the International Arbitration Court. It's been over a month now. They haven't had a response from Modi's government, which is why they are threatening to legally seize sovereign property from the Indian government.
And we will see if they respond at this point. But the IMF has stated that governments and central banks must maintain their pandemic rescue programs or risk triggering a stock market crash. Is this one warning the markets would be looking at this point?
Well, I think so. Although, you know, this is we've heard this warning from the IMF before. I believe they're just really doing it as the World Economic Forum wraps up its 50th annual gathering. One of the issues that the IMF have highlighted is, although we saw at the beginning of the pandemic a huge sell-off, the FTSE, of course, billions was wiped off the FTSE 100 here in the UK, the S&P 500, billions was wiped off there. But since that time, investors appear to have kind of shied away from following what's been going on geopolitically. So, you know, stocks have still been booming. And because that is the case, the IMF are warning governments not to follow the stock market and to maintain low interest figures, to maintain government subsidies, because any change in this procedure would mean that there could be vast sell-offs on the stock market. And if that is the case, there could be recapitalization, there could be mass panic and anxiety. So, with a flashback to what happened in the 2008 financial crisis, it does appear that stock market investors are really at the forefront of what could happen potentially to the global economy if governments don't maintain the subsidy, particularly as, of course, we are seeing that the vaccine rollout is causing a huge issue. Even though it is going particularly well, we are already seeing vaccine wars starting to arise, which may mean that some of these lockdowns we are seeing in Europe could last a lot longer than had previously been thought.
All right, I guess we'll see how it goes. Thank you for the update, and do enjoy the rest of your day. All right. Yeah, for the debt and currency markets, Eddie is back on board.
Thank you, Ladi. We'll be focusing on the currencies market today, and that will be with Adekemi Adenuba, an FX trader at FSDH Merchants Bank. Good morning, Adekemi. Thank you for joining us on the program.
Good morning, Eddie.
So I'd just like to start. What has activity been like in the foreign exchange market? I mean, looking at the I&E window and the parallel market.
Okay. We've seen some relative stability since the beginning of the year for the FX market, especially within the I&E space. The market opened the year within the 390, 394, 393 levels. So for this week, for example, we've seen the market open at 393.30, and as of yesterday, it closed at 394.25. However, market volume has been maintained since the beginning of the year. So we've seen supply in the market range between $290 to $350 million per week. The CBN has continued to intervene, and they've shown capacity in this market. We saw some interventions at the I&E window at the beginning of the year, and we're expecting some more interventions. However, the CBN has continued to do the weekly and bi-weekly interventions as well, i.e. the SME and invisible intervention, which is done weekly, and approximately slightly over 200 million is sold at that window to meet SME for SME demands and invisible demands, while for the retail auction, CBN intervenes with over 300 million. The last retail auction was last Friday, and the result of the auction will be made known tomorrow. So that's it for the I&E window.
All right, Adekemi, thank you for your input on the program. Adekemi Adenuba is an FX trader at FSDH Merchants Bank. Well, very quickly, before we go to Ladi for the cryptocurrency market, the bond market continued its bearish run. The Nigerian Treasury bills market was quiet. We had 4 deals on the CBN special bills and 14 deals at the OMO market yesterday.
All right, then. Thank you for the update. All right, Jimmy.
Oh, yeah. Thank you for the update, Eddie. Well, I need you to keep an eye on the Eurobond maturity. That's for tomorrow. And that's about $500 million. That's something we need to keep an eye on and then find out how that goes. Yeah. What's up with the cryptocurrency market?
Bitcoin still stable around 31,000, but today Dogecoin is taking the shine up 30% thanks to Dogecoin. Yes, thanks to Elon Musk. Yeah, he's a fan of that one. Yeah.
Okay, I guess we'll have to find time for you to really educate us on this crypto market, because you keep coming up with a lot of
altcoin names.
Altcoin names that sounds strange.
I know. Yeah.
Okay, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
Thank you for watching. I'm Ladi Williams. Bye.